A little something about Raymond. He's an investor in stocks and rentals. He wants no money from you, no bait and switch, nothing. Here's what he's going to do. He's going to log into his personal account, share real estate property documents, and give you suggestions on what to read.
Yo, what's up, everybody? Today is September 16, 2020, and I am Raymond from stocksandrentals.com. And I want to do a series of videos to show the importance of knowing the tax side of investing. So I'm trying to encourage you guys to invest in stocks and rental properties. And if you're doing it, or once you start doing it, you're going to see that you're going to make money. So you're going to make profits in your stocks, and you're going to make profits from collecting rents. And once you start making those profits every year, you're going to have to fill out your taxes. So you're going to have to see if you owe any money to the IRS. And a huge part, I want to say it again, a huge part of investing is knowing the tax side. In other words, you ain't trying to make all that money, all the profits, all the hard work, and then at the end of the year, you're paying a lot of money in taxes. You might even get to the point of, is it worth it? And one thing with stocks and rentals is definitely worth it, because if you do everything correctly and you buy the right stocks, you have the right rental, and really if you do it all yourself, meaning on your rental properties, if you do most of your repairs and you're driving back and forth and you can write off your mileage and all that stuff, there's a good chance that you're going to pay very little, if any, in taxes at the end of the year. So all that profit you can keep. So I want to do a quick discussion back when I used to work. Yeah, I was working in corporate America, and my last year working in corporate was in 2012, and I never liked it. I always wanted to get out, and when I was working in corporate America, I was always thinking ahead, meaning that I want to have my own. And while I was working in corporate America, that's when I started buying rental homes. So I was working, buying rental homes. I was working, contributing to my 401k. So I was doing everything to live good now and also live good in the future. So I want to show you some old pay stubs. And this discussion hopefully will help anyone that's still working in corporate America, and you want to, if you like your job, you might want to continue to work and invest in stocks and rentals. Or if you're like me, you'd rather go full time in stocks and rentals and have a lot of spare time where you can do whatever the hell you want to do. And that's exactly what I do, and I'm happy with my life. All right, so we got two pay stubs in front of us. I used to work at General Electric, so if you look at this, it says General Electric here. This one also says General Electric. The reason that the pay stubs look different is because this pay stub, I was actually still working. I was in the office. I logged into the pay portal, and I printed out my pay stub. The one on the right is a pay stub that was mailed to my house. That's why it looks different. And I know I left pretty much maybe on this date or right around the date. So I know my last year of working at GE was August of 2012. So that's why I had this mailed to my house. So everybody should understand their pay stub. Pretty much they're all the same. It's going to say how many hours you work. So for me it was 80. It's going to say how much money you get for working those 80 hours. For me it was $4,178.92. So I got paid every 2 weeks. And if you look over here, somewhere on your pay stub, you should see something that says something similar to before tax deductions. So here is what GE called the S&SP, which is nothing more than their 401k. This is when I decided to contribute 16% of my gross money into my 401k. So 16% of this amount, $4,178.92, is $668.63. So that's how much I decided to contribute pre-tax into my 401k. The rest of these lines and numbers should be numbers that you're familiar with. So this is just HSA I have. So I'm putting money into a HSA. This is my portion of my medical. This is my portion of my dental that I have to pay. And then, of course, we have all the taxes that come out of your check. So we got federal, Medicare, Social Security, and state withholding. In here, I did some more deductions from my pay, and I did not have to do that, but I did. So I had a pension. I was lucky enough to work at a company that had a pension and a 401k. So I decided to put more money into my pension every pay period. So I decided to contribute an extra $125.37. And then I also bought long-term disability, and that cost me $41.80. So your pay stub should look pretty similar to this. Let's compare the pay stub to the right. So the only difference with this pay stub to the right is that I contributed more into my 401k. So I almost doubled my contributions. I went from 16% to 30%. And by going to 30%, 30% of the same pay, which is $4,178.92, same. And it increased my 401k contributions to $1,253.68. Again, it was $668.63 over here. And the rest of the numbers are pretty much the same. So this HSA, 119, healthcare, same, dental, same. Total deductions, this is where it changed. So total deductions here was $816.22. Here, $1,401.35. Why is it larger? Because I decided to contribute more money into my 401k. This benefits me 100%. When you have a 401k, if you leave the company, this is your money to keep. Always look out for yourself. Let's look at the other numbers. These are the same. So pension, $125.37 is still $125.37. Disability, $41.80. Total, same total, $167.17. Same number over here. Now, where did I save money? So I'm putting more money into my 401k, a lot more. Again, almost doubled. A double would be 100%. I'm at 87%. So I'm almost doubling 401k, 100% for me. And guess what? I'm paying less in federal tax and state tax. So federal tax, I'm paying $168.27. Here I paid over $300. State tax, $92.35. Over here, $127.46. The Medicare and Social Security are pretty much the same. So, what is this? $58.61, $58.60. Here, Medicare, Social Security, $169.74. Social Security, $169.75. So my net after-tax deduction, $488.97. Over here at 16% is a lot more, $658.74. So your takeaway from all of these numbers, analyzing my 2 pay stubs is I put in 16% into my 401k. Over here, I put 30% into my 401k. So I'm putting almost double this amount. The $668.63 is almost double. It's all over $1,200 I'm putting in. And let's look at the net pay. So this is my take-home pay. This is where you really should see the benefit. So at 16%, I was taking home $2,537.79. Here, my take-home pay is $2,121.43. The decrease is only 20%. So the difference in the take-home pay is $416.36. I would gladly trade off that $416.36 to almost double my 401k. And let me put up a different, some more math for you guys so you can really see it. So from here, using the numbers from here, I just did a quick summary. So saving 16% into your 401k for a year, your total contributions to your 401k would be over $17,000. Your take-home pay would be $65,982.54. So let's say you bump that up to 30%, which is what I'm trying to get you guys to do. You might not be able to hit 30%, but you want to go higher than what you already are. And if you were to do that, look at your 401k contributions. $32,595.68. Look at that. $17,000 and we're over $32,000. Take home pay. $55,157.18. Look at the take home pay difference. It's a little over $10,000. So I would gladly trade the $10,000 take-home pay to almost double my retirement contributions. Again, I know a lot of you guys might say, you can't do 30%. Let's say you're only doing 5%. Well, maybe you can take 5% to 7% and just see what happens. Or 5% to 10%. See what happens. See how you like your take-home pay. I'm telling you 100%, you're going to be surprised that it did not decrease that much, and you're going to be saving a lot more money into your 401k. And hopefully every year you can just keep bumping it up and up and up, and just save as much as you can. I do want to say that the IRS has limits in terms of how much you can max out your 401k in terms of pre-tax dollars. So you might hit that limit, and you can Google IRS pre-tax contribution limit. And every year that typically changes. All right, so next video will be me logging into my 401k to show you the total amount that I have in each 401k, and I want to talk to you about the pre-tax money that's there and how I will be taxed once I take that money out, and what you want to do to keep all that money. You want to keep every penny. All right, guys, look for part 2, and I will holler at you in a few minutes. Peace.